I'm friends with a guy called Jamie Cato. I don't know if anyone knows Jamie Cato. He used to be producer for Faithless back in the 90s, and he dared me to put the word aubergine into this presentation. I couldn't think of how to put aubergine into this presentation, but there you go. I'm just going to, mention Jamie Cato. My talk is about what makes a blockchain company investable, okay? And who am I, you might think? The clicker is not allowing me to click through. So my name is Jason Grant. That's just my name. That's not who I am. But what I do is I do a lot of spiritual work, actually, and I am very, very interested in intersection of technology, business, psychology. I've spent years of my life doing user experience design and service design for big banks, for government departments, for startups. Worked with a startup called Rolly that's now sold in Apple stores worldwide. It's a hardware, software, and cloud service music making ecosystem. So when we're talking about we want to make an ecosystem, I've made a lot of ecosystems in terms of design, and I know what it takes to make something usable and useful and practical and accessible for people, okay? Please connect with me, jasongrant.in. That's my website. You can find more about who I am, what I do. And my company is called Integral, which is based on integral theory. Integral theory is theory of everything. It includes all these levels of human consciousness evolution, which are instinctive, magic, power, rule, rational, sensitive, integral, and holistic. Integral is on the global level. We're saying that blockchain sits on the sensitive level up top, where we are redistributing the value across the world. Now, people have different lines of development. This is in integral theory, it's called lines of development. So you have your natural, musical, creative, visual, introspective, linguistic, spatial, financial, romantic, academic, emotional, logical, social, spiritual, existential, and physical. So if someone says you're smart, they usually think that you're smart academically, but you may be quote unquote dumb academically, but you might be linguistically very smart, okay? The idea for self-actualized humans, that's why I said I'm not my name, I'm much more than that. The idea is to get up to the holistic level. And us lot here that are interested in blockchain, we're up on the level of sensitive at least, and moving up to integral. Okay, so that's just the backdrop as to how I'm judging, so to speak, although it's a very terrible word to say I'm judging things. But hey, we have to kind of make decisions as to what's worthwhile, worth our time, worth our investment, okay? And design thinking is another kind of mindset and skill set which we use to design anything. So this is another thing which I talk about in different presentations. This is just a backdrop. That actually the best companies in the world are distributing design thinking throughout their entire organization. So companies like Apple, Tesla, Facebook, Google, and increasingly more and more bigger corporations are using design thinking to redesign absolutely everything, including the monetary economics that are powering their organizations, okay? Now, there is a model that I've developed. I'm writing a book called Designed Company. It's halfway through, and there is a model for a designed company which we used, for example, at Rolly to make Rolly sold in Apple stores worldwide. Now, I guess that the investments that you make, let's say, into blockchain companies, you would be quite happy if your blockchain company was to partner in with something like Apple, Tesla, Facebook, etc., to be distributed through such a global network, okay? So this purpose-driven company model I developed to help people understand and explain what makes a company valuable. First thing is purpose. What is the purpose of the company? What is it trying to achieve? How is it serving the humanity? What's its mission? Okay? How is it strategically thinking about long term? Not just we're going to raise some money for the ICO and then disappear to the Caribbean island and sort of just drink mojitos. Okay? That's not a strategy. That's not purpose. Okay? Purpose here is for humanity, for the larger betterment of the entire populace of the planet. Remember, planet is the integral up on the integral theory. The next thing is people. People, each one of these aspects of a company has got an external and internal aspect to it. So the people, in terms of which customers is the company serving, who are its target customers. If I was to say, I'm from Bosnia, and I'm originally from Bosnia, and I was to start a company selling, I don't know, Bosnian pancakes, I don't know. Chances are some Bosnian people might like that, but the rest of the world require a little bit more, persuasion as to why a Bosnian pancake is the pancake that you need to eat. Internally, it's a question of who's the team in this company. And the team, a lot of people say, like, as long as it's a strong team, it's an investable company, right? And a lot of even venture capitalists, I interviewed some people like Anthony Pompliano, Pomp, who is a managing partner for Full Tilt Capital in USA. They invest into blockchain companies, and they'd say, like, the team is the important thing, okay? But certainly people are the first thing after purpose, okay? And the strong team is very, very important. Straight after purpose is a question of systems. How is this company proposing to make the system work that they're making, whether it's a process, whether it's a technology, okay? And again, external and internal. How are they managed internally? I spent years of my life providing management consultancy and organization redesign as to, let's say, all of us, our organization, we've been working to one system, and in future, we have to kind of reorganize ourselves to be able to serve 100 times more customers with the same number of people. That requires organization redesign. If the organizations are run as like pyramidal structures in what is a distributed organization, you are immediately sort of seeing issues there systemically, okay? Systemically. And a lot of big corporations are, quote unquote, suffering from the fact that they're pyramidally organized in a distributed world, which blockchain certainly is. So how are the systems going to work? What's the process end to end? I've been interviewing people that are starting their own ICO companies and blockchain companies. I've been asking them, explain to me, how does this system work end to end for the customer? What does it do for the customer from beginning till the end, okay? The next step is innovation. What is the new innovative thing here? Are they innovating on the inside in the company and saying we're doing these things in an automated fashion, let's say, and we therefore require less staff? Are they externally innovating where they're proposing something new in the open world? Okay, very important thing to consider. Innovation. Why? Because innovation is ultimate thing that drives capitalism and the prosperity and movement forward, so to speak. Because if I was to say to you, I'm going to sell you not this clicker for slideshows, but something that's bigger, slower, requires a car battery to power it, you're probably going to say, I don't want to go back. I want to go with something that maybe I can just wink and it will move the slides forward. Okay? Innovation, very important. Products. This is the products. Most people talk about products as being a thing, it's a good product, it's going to work. Products actually only comes here. Now, I've spent years of my life designing products like apps, services, etc. And often the time I'll come into a company and I go, and they would say, we've got an amazing product, like an app. And I'd say, well, actually, you think the app is your product. But actually, your real product is maybe a system like an API or a data set or some sort of faceless thing that's got much more value than the app. Nobody likes the app, but they like access to your data, okay? Or, it may be the case that they're selling the API, but they don't have an app and so on. So the product is very, very important. And also internally, what kind of products they use to run the company. Then comes the money, because money is the product of selling products to people. And cash flow, how much does this thing cost to run? Cash flow is king in business. If the business can't run itself day to day, it's going to die. It doesn't matter how many customers are demanding its products, okay? So both in terms of what are the price points, can people afford this, etc. There are various kind of matrices that you can use to decide whether businesses are selling for £1. So how to make a million? You can sell 1 million items of £1 or 1 item of £1 million, okay? And good businesses have products across the range, okay? Because not all of us can afford a £1 million item, but most of us can afford one item that's £1, okay? And then growth. Growth is an outcome of doing things on purpose with good people, well systematically, innovatively, good products at good price point, etc., to then achieve growth. Not growth hacking, growth, okay? If you're hacking things, you're not doing things correctly, okay? So growth here is in terms of story, marketing. Can this go viral? Can I tell it to a lookalike of mine, friend, family member, etc.? Will they get it? Does it take like 3 million years to explain, or is it a couple of sentences, right? A couple of sentences is always much better than 3 million years. So you might say, well, now you're feeding us some sort of like primary school stuff. Well, let's break that primary school stuff. You can think of judging, now I use the word, terrible word, but you can judge a company based on internal and external aspects across each one of these areas. Now, as a little exercise, I would kind of ask you to think of an investment that you're making or your own company and classify it, score it in each one of these areas. How good is the focus on the people, on the customers? How good is the team internally? How good are external systems? How good are internal systems? And if you get anywhere above 80 on this matrix, you probably are thinking of a good business there to invest into. Anywhere below 60 is more like an incubator, accelerator type company that still needs to think through how they're going to strengthen this up. If you find one that's above 100, that scores above 100 here, and you need to be kind of quite objective in terms of judging this, okay? If you get one over 100 or 100, near 100, it's a good one, okay? Now, so you can then say there's a strength badge. Maybe this company is good in systems, but not so good at money. Good, okay products, good people, but in terms of growth, I don't see it working well. And the purpose, maybe it's good. So it needs strengthening across growth, money, and innovation side of things. And if there is scope for them to work on that, then you can say they're edging more towards 100 and so on. Okay, there is scope for that expansion to be happening. Now, if we look at some of the parameters that work across these sections, okay, so now drilling deeper, going down the rabbit hole. So in terms of people, I was thinking this in terms of more of a tokenomics design, okay, but really it works across the entire company, these kind of parameters that you want to look at and kind of want to judge the company, both if you're working on it yourself, as well as if you're looking to invest into something. So for people, how strong will the uptake be, and what is the stability of the token or the proposition that you're making? Okay, these are some of the parameters. You might say, the uptake is likely to be 10% of the market that we can identify. Okay, and the stability of that uptake or the stability of demand will be at certain size. Okay. And also, what's the stability of the team and the company itself in terms of the people, and this kind of stability in terms of the demand, okay? Because you might see like demand right now, demand maybe for Bitcoin is less than it was just before New Year when there was huge hype, right? And many businesses have this kind of oscillating demand, right? Recently, I was in Romania, and they were saying, a company is producing briquettes that are used for fire for lighting up central heating, and they say there is zero demand from somewhere like March to August, okay, because nobody's looking to heat up houses during that time. But then when the winter is knocking on the door, the demand just spikes up, okay? And it's really hard to supply the demand when it spikes up, and it's really hard to survive when there is no demand, okay? So it's like 6 months no demand, 6 months full-on demand, okay? And that's the nature of most businesses, and that creates instability, okay? Now, in terms of systems, you've got things like, is this a decentralized system? Has it got mining? Okay, how does the mining work? What's the governance model of this inside the white paper? This is why most blockchain startups have a white paper, because it's really outlining the system, because these are fat protocol startups, okay? Whereas most of the time your internet startup has got HTTP protocol, that's all you really need to run it, and then everything is in the app itself. With the blockchain systems, everything's in the protocol, and it's the light touch interface on top, okay? So it's important for you to understand the aspects of the system. Is it divisible, the token, for example? What is the anonymity aspect? I'm not sure if I spelled anonymity on there correctly. Security. What is the technology that's underpinning this? How reliable is it? How affordable is the technology for people to get access to, etc.? So that's on the system side. On the innovation side, there is the question of appeal. Is this an appealing thing for people to own? There is an element of brand. There's an element of look and feel and the name, etc. There is an aspect of uniqueness. Is it different? I'm already seeing across these stages, there's 3 or 4 startups doing more or less the same thing. The innovation is becoming harder to differentiate, right? Because whereas 2 years ago we're saying, oh, I'm going to do a car token, fancy luxury car token. It's like now people are doing it. There's 2 car tokens in this place alone, right? And it's like, yeah, but these are different. We're different like this. We're different like that. Okay, you need to be as unique as possible. There's an element of versatility of use of the token and fungibility. Can I exchange it for other things of value? Okay. In terms of products, the big aspect is collateralization. And here I'm talking more about products in terms of concrete. This chair is a concrete product, and therefore it has some sort of price and value in real world. When you're talking about, tokenomics and issuing tokens like utility for exchange in some imaginary world of the future, it's hard for people to project that. Now, if there is collateralization against real world collateral such as gold, water, data, or even fiat currency, let's say, although I wouldn't recommend that as collateral for obvious reasons. It's an important aspect, collateralization. And the companies that have some sort of real world tangible collateral to put against their tokens are heading into this world of tokenized assets, potentially, and so on, and not just utility tokens. Utility tokens have their use, but I think asset tokens are much more interesting. Now, on the money side, what is the utility of this? Can I use it for different things, or is it just for once in a lifetime kind of use? Economics of it, how does the money work? How does it appreciate, depreciate, etc., etc.? What's the value of it? How do we decide the value of it? Merchants. I put merchants in there because most companies require some sort of outlets, point of sale, places where they need to be accepted. So, for example, talking with a water bottling company in Romania, we're talking about the merchants should be able to accept this water token, and the distributors should be able to use it, and so on. It's important points of e-commerce and commerce in general. And low fees, if at all possible. It should be possible with blockchain, although we know there's issues with Bitcoin. So then in terms of growth, there's an element of scarcity and being able to get hold of these tokens, not just like willy-nilly, but in some sort of way that is more kind of precious. My precious. Distribution, how are you going to distribute tokens? How many people can you distribute them to? How many are they already distributed? Is it kind of centralized to, one giant buyer? Or is it, going back to that thing, it was like, has million people bought £1 worth? Or is it one person bought £1 million worth, right? It's different type of distribution there. Community, have you got a strong community that's kind of harping on about it, telling that story from the growth aspect, okay? And what's the velocity of this? Now, velocity is very, very important because, Google would talk about toothbrush test for use of apps where, like, toothbrushing is something that you do twice a day at least. Now, if you're doing like trading, for example, you're probably looking at your trading screens like, 300 times a day, okay? That's like high velocity use case, okay? So velocity is very important because you want people to transact your token as often as possible. So when someone says, we're going to do, let's say, I'm passionate about this stuff, but let's say art token, collateralized art tokens, okay? So I might buy a piece of Van Gogh and then I just kind of want to sit on it, you know? I don't want to kind of be selling it to the next person and next person. It's just like, I don't necessarily want to be trading it 5 times a day. Whereas if I'm buying a water thing, I might buy it 6 times a day, depending on how healthy I'm feeling, right? So that velocity is very important. And I've seen this, many very smart founders of startups have failed because they didn't take velocity of transactions and interactions into account. They just kind of hoped that somehow there's going to be huge demand for usage of their app or product or token, right? Token is just really, you know, adding monetary aspect to an interaction. So altogether, these are some of the things that you might want to consider when you're judging a startup to, and this is irrespective of blockchain, but especially for blockchain because there's a monetary aspect here. And, you know, so all these aspects worth looking into and saying, is this a real world business that's got something like a water resource behind it, or you know, gold and fancy cars, even all that kind of stuff, because it's adding real world tangible value, and we can't sort of get away from that. So that's really, in a nutshell, my presentation. I invite some questions if I've got some time. I'm not sure how much time I've still got. And please connect with me. You know, this is just an opener of a conversation. Does anyone have any question around my sort of proposition for how to judge and value companies in blockchain space? Please. Yes. Yeah. Yes. Yeah. So just notionally, we're saying this is a 10 out of 10 maximum grade. Now, we run Integral Incubator for blockchain startups. I forgot to mention that. So for an Integral Incubator, for us to take on a blockchain startup, we're going to run through exactly this model, okay? And ask questions around all these areas. Each business, because if you look at a scientific method for anything, you need to be able to repeat an experiment and run through the same framework, okay? So any startup, I will be having formal, if you want to join a blockchain integral incubator, I will be asking you questions around these areas and then scoring them in this way. Okay, and trust me, it works really well. Okay, people might say like, yeah, we got a good team, and so on. Like, well, who's in your team? It's like, well, once I had a friend from Imperial, and it's like, are you still connected to them? It's like, no, I lost touch 17 years ago. It's like, that's not your team, right? So you know, you might be amazing, but it's not a team. And you know, similar around money. You know, people are like, we're going to sell so many of these. You know, people are going to buy 3 times a day. And I was like, what's the velocity of interaction? Like, well, people buy like once every 6 months, maybe. It's like, how often do you buy a house? It's like once every 20 years, if you can ever afford one. So the velocity of interaction there is very low. Right? I worked with companies like Bupa, where it's health insurance, and they're like lifetime value of a Bupa customer, something like £30,000. But you know, once they buy, you sit on that Bupa insurance for forever. You know, when someone wants to change over from Bupa to another insurance provider, the other insurance provider is like, oh my God, someone's wanting to change their health insurance. Yeah, it's like, yeah. How much time do I have? 0. Okay, that's it. So thank you very much, and connect, please, with me, jasongrant.in.
Jason, thank you so much.